This is Nightly Business Report with Bill Griffith and Sue Herrera.
Midnight deadline. The White House is set to levy tariffs on billions of dollars of Chinese goods, heightening tensions between the world's two largest economies.
Side effects. Fed policymakers are increasingly concerned that the economy could hit a snag as governments fight over trade.
Gender divide. Men dominate the cryptocurrency world, but a new movement wants to change that. Those stories and more tonight on Nightly Business Report for Thursday, July 5th.
And we bid you good evening, everybody. Stocks rose sharply today, in part on hopes for a trade deal with Germany involving tariffs on cars. That helped lift the mood on Wall Street today. The Dow gained 181 points, near the highs for the session at 24,356. The Nasdaq added 83. The S&P was up 23 points. However, in just a few hours, the U.S. is still scheduled to slap billions of dollars worth of tariffs on goods imported from China. That deadline is midnight tonight. And China has already promised swift retaliation, which only, of course, further escalates tensions between the world's two economic superpowers. More on that right now from Eunice Yoon in Beijing.
China is preparing for the fight, even a public relations fight. The Chinese had originally planned to impose tariffs at midnight in China on Friday to match the U.S.'s 12:01 a.m. start time. However, because of the time difference, July 6th in China comes before July 6th in the U.S., the Chinese said they would delay their tariffs until immediately after the Americans impose theirs. China's cabinet issued a statement saying China absolutely won't fire the first shot. That means China will impose its tariffs at around noon local time, which is unusual for the country. It also shows how sensitive Beijing is about appearing as if it's an aggressor. It wants to make sure that it's seen as the innocent party, as the one who's the good guy in this fight against President Trump. Both countries will initiate tariffs up to 25% on $34 billion worth of goods. The U.S. will punish Chinese-made high-tech, among other products. China will strike back at farm goods targeting President Trump's political base. What are the Chinese doing to gird themselves during this fight? There's speculation that China's purposely devaluing the currency to promote China's exports by making them cheaper. There are many who say that's not the case. Nevertheless, the yuan hit its weakest level in almost a year this week. And there's talk that the Chinese could loosen policy further. It's already done that as of today. As for American companies, China warned that U.S. firms could suffer because the tariffs would wreak havoc on global supply chains. The Commerce Ministry pointed out today that foreign firms account for $20 billion, about two-thirds of the exports from China subject to the tariffs, with many of them American. The ministry said that the U.S. is, quote, firing shots at the entire world, including itself. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Federal Reserve policymakers are watching the trade fight very closely. The potential for tariffs to ripple through the economy dominated the central bank's last meeting. Diana Olick has more.
There was a lot of trade talk among members of the FOMC in the minutes. They expressed concern over possible adverse effects of tariffs and other proposed trade restrictions in the U.S. and abroad and how they could affect investment activity. That uncertainty and risks, they said, were, quote, intensifying. They noted indications of a pullback in capital spending, again, because of that uncertainty. Specifically, steel and aluminum industries were seeing higher prices without expansion. They also noted supply constraints in the construction sector. Otherwise, members agreed the labor market in the U.S. continues to strengthen, with economic activity rising at a solid rate. They pointed to favorable economic factors being supportive of above-trend GDP growth, namely a strong labor market, federal tax stimulus, and accommodative financial conditions, as well as high consumer confidence and a pickup in household spending. But some members raised concern that a prolonged period of the economy cranking above its potential could increase the risk of inflation, eventually leading to a significant economic downturn. There was discussion of the labor shortage, which we saw in the ADP jobs report, showing more job openings than eligible workers to fill them. Finally, members revisited the idea of changing the language in these statements on policy from accommodative to neutral. So that one is likely coming. For Nightly Business Report, I'm Diana Olick in Washington.
As we mentioned earlier, stocks rose today, led by technology, and there's one group within tech that's getting a lot of attention right now. That would be the semiconductors. Bob Pisani explains now why that sector, along with two others, are in focus on Wall Street right now.
Stocks staged an impressive comeback today, though on very light trading volume, which is what you might expect on a holiday-shortened week. But looking back over the last couple of weeks, the markets overall have taken on a notably defensive tone amid the rising trade tensions. The S&P has been really range-bound, stuck in a range of about 2,700 to 2,750. It's not showing any signs of breaking out just yet, though today was encouraging. The strength really has stemmed from defensive groups, sectors like utilities and telecom and real estate. That's generally not the kind of leadership investors want to see. The more crucial cyclical sectors like industrials, for example, is down 2%. Banks and semiconductors, they're down 4% in the last few weeks. And a lot of big chip stocks, which are the market leaders, they're down even more. Micron, Nvidia, Broadcom, AMD, they've fallen almost 10% in the last few weeks, though they did get a modest bounce today. Now, what concerns traders is this notion that trade wars will translate into a slowdown in global growth and a reduction in earnings. Many say the markets need to get away from the defensive leadership we've seen and rotate back into those more economically sensitive groups like industrials, banks, and semiconductors. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Bob just mentioned Micron Technology. That company's been caught in a legal battle in China that has added to the U.S.-China trade tensions. Today, a temporary ban was put in place that prevents Micron from selling some chips in that country. But the company did say the decision will not have a big impact on its revenue, and that sent shares up more than 2% today.
So let's focus more on those three key sectors, the banks, the semis, and the industrials, with Jack Ablin. He is the Chief Investment Officer at Crescent Wealth Advisors. Always good to see you, Jack.
Nice to see you, Sue.
Let's start with semiconductors. I mean, basically, they're caught in this trade issue, and it doesn't look like that's going to go away anytime soon. What's your attitude towards what the ultimate impact might be on that particular sector?
You're right, Sue. The semiconductors right now are collateral damage in this tit-for-tat trade war with China. We have to keep in mind that Micron in particular was an object of a Chinese takeover several years ago that was denied. Since that time, of course, Micron has accused their Chinese competitors of stealing their technology. And so now to have a Chinese court weigh against Micron is sort of a slap that goes against what we've done to China in the past.
Mm-hmm. Jack, many of these industrial multinationals were created as we saw the rise of globalization around the world. But now we're going the other direction. The pendulum is swinging the other way. What happens to these multinationals now, do you think?
Well, I think, two things. One is I think policy will ultimately adjust. I don't think we're going to see necessarily a 180-degree reversal in policy. I think most economists, most policymakers realize we do need global trade. In fact, in many respects, President Trump himself says we want free trade. We just don't want any impediments at all. And if we're going to have any, then we're going to impose some ourselves. So I do think the trend is still more toward free trade. But that said, you're right, Bill. These companies have optimized their business processes on the reality that's been the trend for the last 30 years, and that's globalization and outsourcing. And now to try to turn a battleship like that around over a two-quarter period is just very difficult.
Now, the financials face other challenges, certainly. The interest rate differential, the Fed, the ECB and its decision recently on interest rates. How do you feel about that particular sector and the headwinds that they seem to be dealing with? Temporary, perhaps, or maybe a little bit longer term?
I think it may be a little bit longer term, Sue, and this is a puzzle because the financials are really the circulatory system of the economy. What I have found is that the stock market does well when financials do well. Stock market doesn't do so well when financials underperform. So even if you're an investor in other sectors, you really do want to see the financials outperform if they can. But that said, interest rates in the intermediate part of the curve are the 10-year are low. Just as the short rates are rising, their net interest margins are really falling. And so that's putting a lot of profit pressure on the large banks.
Lots to ponder. Thanks, Jack. Appreciate it.
Thank you, Sue.
Jack Ablin with Crescent Wealth Advisors. Bill?
Elsewhere, the private sector added jobs in June, but not as many as expected. First thing this morning, payroll processor ADP reported a rise of 177,000 positions last month. Estimates were for a rise of 185,000. But this marks the fourth straight month of monthly job growth below 200,000, and it's one of the reasons that businesses are still struggling to find enough new hires right now. Same old story. By the way, in a separate report, new applications for unemployment benefits last week increased by 3,000. Many economists cited seasonal factors for that rise. And the government's big monthly jobs report will be released tomorrow morning. Sue?
Bill, the services sector activity picked up in June thanks to an uptick in new orders. While the Institute for Supply Management's index showed expansion in the services sector, trade, tariffs, and a shortage of workers were starting to strain the supply chain, and that could slow momentum in the months ahead. The services sector accounts for more than 2/3 of economic activity.
Time to take a look at today's upgrades and downgrades, and we begin with Facebook's price target, which was raised to $275 at BTIG. The analyst there believes that consumers don't really care about the company's privacy scandal. The firm is maintaining its buy rating on that stock, and shares of Facebook rose nearly 3% today to $198.45. Clean tech company Advanced Energy was upgraded to outperform from market performant Raymond James. The analyst there cites the firm's free cash flow and its ability to make acquisitions while still maintaining steady buybacks. Price target now $72. That stock rose more than 4% to $60.27.
Another under-the-radar name was upgraded. Brookfield Infrastructure's rating was raised to outperform from neutral at Credit Suisse. The analyst cites its unusual acquisition of Enbridge, a Canadian natural gas business. The price target is 46. The stock rose 5.5% to $40.87. Cosmos Energy is not a household name necessarily, but it did get an upgrade to outperform from sector perform at RBC Capital Markets. The analyst expects the company to benefit from higher oil prices, among other factors. The price target is $10, and the stock was up 2% to $8.20.
Still ahead, how one couple turned social media posts into a lucrative business.
President Trump has accepted the resignation of EPA Administrator Scott Pruitt. Pruitt's exit comes amid alleged ethics and spending violations. While at the EPA, Pruitt rolled back environmental regulations and broadly supported the fossil fuel industry. Deputy Administrator Andrew Wheeler will become acting chief of the agency on Monday.
Elsewhere, the president is expected to tell NATO nations at next week's summit that the U.S. cannot be the world's piggy bank. President Trump has pressured some NATO allies already to significantly increase their military spending, and according to the NATO Secretary General, progress is being made.
All NATO allies agree that European allies and Canada have to invest more in defense. They agree that we need fairer burden sharing. The good news is that we see that European allies and Canada are stepping up. All allies have started to increase defense spending, and more allies spend 2% of GDP on defense. So we still have a long way to go, but we have started to move in the right direction.
By the way, the Brussels NATO summit takes place next week on July 11th and 12th.
The president plans to announce his Supreme Court nominee on Monday at 9 p.m. Eastern Time. NBC News says his choice is likely one of these three. Judge Brett Kavanaugh, a former law clerk to retiring Justice Kennedy. He was appointed to the U.S. Court of Appeals, D.C. Circuit by President George W. Bush. Raymond Kethledge also clerked for Kennedy and was a George Bush nominee, or appointee, I should say, and Amy Coney Barrett. She has been a federal judge for about a year and once clerked for the late Justice Antonin Scalia.
Michael Jones joins us now to talk about what each nominee might mean for business and federal regulation. Michael is chairman of Riverfront Investments. He joins us tonight from Richmond. Good to see you again. Welcome back.
Good to be back.
You think all three are pro-business, so the business world should welcome them. Let's start with Ms. Barrett. You call her the biggest question mark. Why?
Well, when you look at Justice Barrett, I mean, she is fairly newly arrived to the judicial arena from academia. She hasn't had time to compile much of a track record in the kind of cases, in the kind of areas that are of interest to financial markets. Most of her academic career involves social issues that are going to be very much of interest in any confirmation hearing, but aren't as central to what financial markets want to know. So she would be the biggest question mark in terms of her approach towards taxation, regulation, and so forth, and therefore markets don't like uncertainty, and she would probably be the least favorite of the three nominees from a financial market perspective.
Let's turn to Brett Kavanaugh. Justice Kavanaugh, you say, is a solid appointment, perhaps. What is that based on, and what does his track record tell us about how he might come down on issues important to business?
So with respect to Kavanaugh, when you think about what financial markets care about, you know, there's a few areas. They want to know the justice's philosophy towards taxation, towards regulation, towards lawsuits, towards labor market relations. Those are kind of the big ones. And when you look at Justice Kavanaugh, he has a very strong track record in the area of regulation. He is on record as being very skeptical of the constitutionality of the structure of the Consumer Financial Protection Bureau, the isolation of that bureau from congressional and presidential oversight. The financial markets will really like that. Also, with respect to the EPA, he is on record as upholding requirements that the EPA apply a cost-benefit analysis to any regulations. So all of the heavily regulated industries, traditional smokestack industries, they're going to really like his track record there. He doesn't have as much of a track record, particularly compared to Kethledge, in areas like labor market relations and lawsuits. So I would call him the second best nominee from a financial markets perspective.
Which leads us to the one you think will get the nod, and that is Raymond Kethledge, right?
Well, I think, remember that the calculation is both the social policy and the financial, and all I'm really interested in is the impact on markets. So my favorite would be Kethledge, but that's because he aligns so much with what I think financial markets are going to want to see. He is on record as upholding restrictions on labor unions collecting dues from anyone but their membership. You know, the old smokestack, heavily unionized industries, they will like that. He is equally good on deregulation as Kavanaugh and has a strong track record on that score. He has ruled against the IRS and in favor of the Tea Party on areas of tax regulation. So again, that's very favorable for the financial markets. And then last but not least, and this is a really important one, class action lawsuits have become a real plague for a lot of industries, pretty much so, ranging from technology to transportation. Almost every industry has suffered from some degree of class action lawsuits. Right. And Justice Kethledge is on record as being very skeptical of the kinds of settlements that award tens of millions to the lawyers and a $25 off coupon to the actual litigants in the lawsuit. So I think when you look at the broad track record of the three different nominees, I think Justice Kethledge is the one that has the most track record in the widest series of areas that are of interest to financial markets. All right. And he's going to be the one that markets will like best.
We will know Monday night. Michael Jones of Riverfront Investments, always good to see you. Thanks for joining us tonight.
Good to be here.
Boeing takes control of Embraer's commercial aircraft business. That's where we begin tonight's market focus. The nearly $5 billion joint venture gives Boeing greater access to the market for smaller passenger planes. Boeing and Embraer are making this deal at a time when competition is heating up, with jet makers from China, Russia, and Japan. Shares of Boeing were up a tick to $333.18. Meanwhile, shares of Embraer fell 10% to $23.50. Industrial gas company Praxair is one step closer to completing its $45 billion merger with German rival Linde. Praxair said it plans to sell nearly $6 billion worth of European assets in an effort to secure regulatory approval. Shares of Praxair rose about 3% to finish the day at $161.88. Barnes & Noble has fired its CEO for violating company policies. The company wouldn't specify what the violation was, but did say it was not related to finances. Barnes & Noble shares climbed nearly 1% to $5.90.
And after the bell tonight, discount retailer PriceSmart reported a rise in revenue that beat expectations, but profits did come in light. Shares initially traded lower in the extended session, erasing a 2% gain from earlier when shares closed at $93.40.
When you think of social media influencers, you often think of celebrities with big followings, but that's not always the case. Regular people can also become influencers. All it takes is a niche, lots of posts, and a growing audience. And the ad dollars can soon follow. Kate Rogers has more in our Small Business Matters segment.
The 2008 recession hit Kelly and Daniel Seegers hard. They lost their jobs, his in personal training and hers as a youth counselor, within days of getting married and closing on a home. To make ends meet, they turned to their experience in the fitness world.
We both had to pick up extra jobs, but in the meantime, I started writing online and I started to grasp the concept of passive income. You work once, you create content that is ideally evergreen, and it brings both people and income to that content.
They used YouTube, uploading content directly to viewers, from workouts to commentary on living a healthy life with balance, joining the company's millions of content creators with their channel Fitness Blender.
This is Daniel and Kelly with fitnessblender.com.
A beautiful thing about YouTube, one of my favorite things, is that it costs nothing to fail. So you can try over and over again until you find that audience and find something that works.
While startup costs for would-be influencers like the Seegers are low, advertisers are spending big bucks to partner with social media stars in order to reach new audiences. $2 billion will be spent on Instagram influencer marketing this year alone. Obviously, an influencer marketing company works with 150 brands, connecting them to more than 450,000 influencers in its network.
This is great content. Companies care about influencer marketing because it's really an evolution of celebrity marketing. We're seeing their budgets triple, quadruple, and sometimes 10x just from last year to this year.
While many start out working as influencers on the side, Karwowski says it is possible to make it a full-time job with dedication and a unique aesthetic. After 3 years and hundreds of videos, the Seegers committed to Fitness Blender full-time. They started with 0 subscribers and today have more than 5 million, with thousands signing up each day. They make money on the advertisements that are shown on their YouTube channel.
If you're going to make it in an online business, you want to make sure that you pick something that you are passionate about, because you're going to spend a lot of time on it and you need to be excited about it. And you should also pick something that you're knowledgeable on so that you're actually bringing something to the people where you have something to offer.
Kelly says all it took was the first deposit in the couple's advertising account to make the Seegers realize this might actually be a viable career. Today, their company is worth more than $10 million. For Nightly Business Report, I'm Kate Rogers.
Coming up, a financial feminist movement in Bitcoin. They are the new crypto force, women diving into the world of digital currency, where men currently make up more than 90% of that industry. They're hoping to make a difference and inspire the next generation of women. Andrea Day has more.
Is crypto sexy?
It's sexy to me.
Meet Shanna Walton, a.k.a. the Bitcoin bombshell.
The profits can be very sexy.
She's part of a growing group of women jumping headfirst into a world dominated by men, like Meredith Davis.
7 months pregnant, yes.
Nyla Rogers.
We are moving into a new feminist movement, and it is financial.
And Erica Munoz.
My whole point, it's always get more women interested.
We were invited to join them at a meetup in New York City, a monthly forum to share ideas and get advice on everything from trading to blockchain.
I'm doing my part, my small part, to bring in as many women as I can, just to let them know, like, don't be intimidated.
And she says a history of intimidation has kept some women out of the game.
A lot of the barriers to entry that I thought existed were either remembered from times that don't really apply anymore.
No barriers for this group, who come from all walks of life, and for many, a first step into the financial arena.
I'm in the hospitality industry. That's my background for the past 12 years.
I was a U.S. Marine, and then I worked in the government space for a long time. Most people, I think, that I've interacted with are working from home or a coffee shop or wherever is most expedient. So for moms, that's a huge opportunity.
An opportunity Marilyn DeLucine saw 4 years ago when she started a website targeting stay-at-home moms, cryptomoms.com.
90 to 95% of the people that were involved or have been involved in the cryptocurrency have been men. And it's time that women started showing up to the table.
And showing up they are. She says the site recently shot up 25%.
It's a global market. It's 24 hours. So after the kids go to bed, you can get on your computer and do anything that you can do at between 9 and 5.
Do you feel like you have anything to prove to men?
No, absolutely not. We are definitely at the beginning of what's going to be like a major game changer.
Are you here to stay in the game?
Absolutely. Why would I go?
And they all say the most important advice is to do tons of research before you jump in. That's one reason why they meet every month to share the very latest information. For Nightly Business Report, I'm Andrea Day.
And before we go, a look at the final numbers on Wall Street today. The Dow advanced by 181 points. The Nasdaq added 83. The S&P was up 23. We have the big jobs report first thing tomorrow morning.
Yep, we do. So you'll want to join us tomorrow night for some analysis. That'll do it for Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a wonderful evening. See you tomorrow.